Hey everybody, Sean Ragen with the Dutko Ragen Homes Investments team at Keller Williams United here. We have our friend and expert lender, Chris Shedd at Movement Mortgage. Right now, we're certainly living in very volatile times and the market is extremely dynamic across the board. The Federal Reserve just came out and increased rates 0.75%. We wanted to bring in Chris to kind of give us some perspective on that and let us know, like, what does that mean for mortgages and what's to expect?
No, it's a great question. Thank you for having me. So yeah, there's a lot of volatility in the markets right now, and one of the main questions that we're getting is, does that 75 basis point hike that the Fed just announced impact mortgage rates directly? So are we going from 5% to 5.75%? And that is not necessarily the case. What we typically talk about with the Fed funds rate is that is an overnight rate that banks lend money back and forth to each other, and it has a direct impact on shorter term debt, like a home equity line of credit or a car loan, but not necessarily a mortgage that typically is a 30-year time frame. So at times we can actually see an inverse of what happens in the Fed funds rate hike, where we actually see a reprieve and better rates as far as mortgages go.
Awesome. Well, and I know too, it's been hard for people to save in times like this, right? Mm-hmm. Inflation is running rampant. People feel like maybe they're getting priced out of the market, the traditional 20% down to be able to get into a home. What other options are there? You know, can people put less down? Are there other programs or products where, hey, maybe I don't need to have a huge down payment to get into a home, but I want to be able to still build wealth and have a home that I want to plant some roots in?
Absolutely. Yeah, it's really focused on a lot of first-time home buyers right now that may not have the ability to sell a home in order to kind of springboard back to have a large down payment for their next home. So what do? There are a number of programs out in the marketplace right now. We have things down to, programs down to as little as 3% down. There's some bond programs that every state actually offers. Typically, there's some income requirements to that, and you want to obviously have as good a credit score as you possibly can. But there are a number of products out there to help first-time home buyers purchase, even in a market like we're seeing right now.
Awesome. So there are options.
There are plenty of options.
Thanks for tuning in, everybody. And Chris, thank you especially for your expert advice. We really appreciate that. Stay tuned, as we'll be delivering more information and content to come. And as always, if you're looking to buy, sell, or invest in real estate, please reach out. We'd love to talk through any options and strategies with you.